YouTube, welcome back to the Investing on a 9 to 5 YouTube channel. It is your boy, the Dividend Dog. Happy Saturday out there to you guys. It's been a while since we dropped a video. Been busy with life and moving and working, all that good jazz. But I got a video out for you guys today titled SCHD Update. You guys know I'm going to give you at least an update on that every single month with all the shares and stuff we've been buying, what's going on in the market. And then also, too, I took profit on one stock. And then I took the profits, 2K of that, and bought a new stock. And I'll be going over that stock as well in the video. So appreciate you guys for hanging on. Do not forget to hit the like and subscribe button to the channel so you can stay updated on content. And if you're new to the channel, welcome. I am the Dividend Dog here on YouTube and on X. It's where you can find me hanging out with all the other awesome investors. And then once again, guys, don't forget to hit the like and subscribe to the channel so you can stay up to date on the content. Appreciate you guys for being here. Let's go ahead and get to the video. So the last week, S&P was only up 0.21%. You guys know we've been in a little correction territory in the market, but I see that as only opportunity. If you've been following the channel, we love to see red in the market, especially on companies we've been buying at all-time highs or near all-time highs. Now these same exact companies are down 15, 10, 20%, and so on. Sometimes some of the companies that you may own a little bit more risky are probably down even more. All this is just smoke through the long-term vision that we see of getting ourselves free from whatever we are into, 9 to 5 and so on. I think this opportunity is awesome for the market, and all this tariff talk eventually is gonna blow over, and we'll be back smooth sailing the S&P. But you guys can see, closed out at what, 563 and got into 565 after hours. So right now, like I said, we've been in some correction territory, nothing too crazy, but I only see it as opportunity, and that's why I made a certain move here in the portfolio. So this is the portfolio here. We're at $66,227 year to date, or year. I was about to say year to date right now, or time to date, as much as we've been investing for the last 5 years. We're only down 4% on the year, down $3,000. Nothing crazy. I'm not sweating. Even though the market, some of these companies are down 15%, 10%, so on, but portfolio is holding up pretty well. Overall, I'm just going to keep adding and adding on to where I see value and where I see fit. So on to the SCHD update. I'm not going to go over what it does, and we all know who they are and what they do and how they make their money. We got a reconstitution day. It was supposed to have been yesterday, but I haven't seen any news on what the collaboration of the new companies going in and going out of the fund, on what that's going to look like for the year. But I'm excited to see that. But in the meantime, we've got up to 331 shares of SCHD with an average cost of $27. So around $9,200 invested total in the fund. This past week, it was up 0.4%. Total, we're up only 1% of SCHD right now. But I know eventually this is going to tick off and start making some positive trajectory up to $29, $30, where we believe SCHD is worth its value, and so on, and hopefully even more. But it's just going to continue to boost up the dividend income. Going to continue to get that dividend growth that this fund provides to investors, and the companies that are in are well worth value, because you guys know SCHD has a strategic formula on the companies and stuff that they put into the ETF. And like I said, guys, this is one of my favorite ETFs to own in the stock market. Next up, we got the Mighty ET. Got an average cost right now of $15.48 on ET. I did had 647 shares, but I recently just took profits of $2,000. We were at $12,000 market value. Took $2,000 in profits, and took it over to the next fund we're going to be talking about. Still got 10,000 left in ET, up 20%, still up $1,600. I did this yesterday or a couple days ago when it was at 19. Decided to take some profits and go rinse and repeat and go boost up the dividend income with JEPQ. Now, JEPQ is a ETF fund, premium income ETF that provides a really good income to the portfolio. What they do in JEPQ is they trade options against stocks that are in the portfolio. So with that in the ETF, they have all of these companies sectored out: technology, consumers, utilities, a whole plethora of companies, 109 of them total. Fund was started in May of 2022. And they trade options against those, so you don't have to, and you basically get the income that they make off those option calls as a premium income. Now, they under the hood, this is what they have. They have Apple, Nvidia, Microsoft, Amazon, Google, Meta, Broadcom, Netflix, and they trade, like I said, in Tesla, they trade options against those. And like I said, you get the premium income that they make off of those via dividends. So they pay out 11%. There we go. The 30-day yield is about 11% of the yield. So right now, with my 18 shares that I have of the company, that gives me around $18 a month from JEPQ to buy back shares in JEPQ. Now, this is a monthly fund, so I get 18 every single month. Now that's going to help boost up my dividend income. It went from 1483 to about 1569. That bumps me up to 130 a month, about $4.30 daily, and my yield is around 2.46%, give or so. Whatever, I think it is 2.46%, which is good. I don't want my yield to be 4-5% right now. I want it to be between the 2 and 3% range. Therefore, I can continue to get the dividend growth. So eventually, this will be yielding in the 7s and the 8s 10, 15 years from now. Now, my strategy with JEPQ is to continue to add on to this for the next 10 years as much as I possibly can and build up that monthly income. So eventually, I'm getting not 18 a month, I'm getting a couple $100 a month just from this. That's going to continue to buy shares for me. And then hopefully that snowball continues down the line where I'm getting not just a couple hundred a month. Then hopefully when I start to look at retirement, I'm getting $1,500 to $2,000 a month just from this one ETF. That's hypothetically what I'm looking at down the line, which is going to help my dividend income. So, guys, thank you guys again for being here on the Investing on a 9 to 5 YouTube channel with your boy, the Dividend Dog. Appreciate you guys for sticking out this video. Let me know what you guys think about me getting into JEPQ. And if you own JEPQ, let me know in the comments, guys. I really think this is a good ETF. I see a lot of investors on X and on YouTube, putting this in their portfolio to get some premium income to help boost up the dividends as well. And I like it too. Right now, it's at a low, so hopefully I get some capital gains from buying it at a low. And if we go lower, you guys know the yield on dividend stocks go higher as price goes lower, so you get paid more for holding the stocks during correction phase. And we guys know the market's rigged to go higher. This is all just smoke, so ignore it. Keep buying your shares, and please do not forget to like and subscribe to the channel. And I'll see you guys in the next video. I'm out.